Dated securities yesterday, and joining us now in a CNBC exclusive interview to discuss is Treasury Secretary Scott Bessent. Secretary Bessent, welcome back. It's good to see you.
Sarah, good morning. Good to see you.
So talk us through what you were trying to do here by announcing the increased size of the buybacks.
Yeah, we're trying to signal that we think that this is a thinly traded area of the market, that we're in August, and there's been a lot of corporate issuance that's influenced the market, and we believe that there are many underlying factors that the market is not looking at, and we are going to make a market in these. We routinely do buybacks, and we're going to increase the size of the buyback. And Sarah, I would note that it could be more than the $4 billion per issue.
Yeah, I was going to ask how big this could get. If the signal here is that you're not happy with the direction of yields, they've gone back the other way. We've erased most of the Treasury rally that you got yesterday with that big surprise. So how much more are you willing to do?
Well, again, we have a big toolkit, so we'll see. And part of it is signaling here and to show that we believe that the yields don't reflect the underlying fundamentals. This Iran conflict, we will get on the other side of this. We don't know when, and we can talk about the economic measures we're going to be taking against Iran in a minute.
Sure.
We believe that the liquidity, especially in the 30-year point, is very poor, and we are in the administration. We are announcing probably at the end of this week, beginning of next week, an increased focus on fiscal consolidation, and it's coming from President Trump. Russ Vought and myself will be examining both on the revenue side and the cost side what we can do.
Yeah, because that's where I was going to go and where a lot of the analysis is focused, as you know, Mr. Secretary, which is, strong signal from the administration on the buybacks. But, the fundamentals are ultimately what is going to prevail here in the bond market. And the fundamentals are hard to ignore when it comes to the size of our debt, with public debt increasing to now $40 trillion.
Yeah, I mean, look, Sarah, there's nothing magic about the 40 trillion number, and we can grow our way out of that. So, but what we do want to signal is I think that there's been a lot of misinformation in terms of what's going on with the deficit, what's going on with the deficit to GDP. We actually had a fiscal consolidation for the calendar year 2025. We were at about 5.7% of GDP, and one of the things that's temporary here that's influencing the deficit has been these tariff refunds, and we won't have to do that again. And the Ambassador Greer, through the 301 process, is re-implementing the same level of tariffs, and I would expect that our 2026 tariff income is going to be roughly what it was in 25, and we're going to be able to keep that in terms of the budget consolidation. The other big item in the budget that we're seeing is the hit that we're taking from to revenues for the immediate expensing of factories and of equipment and farm structures. And I think that if people sit back and think that's not government spending, that is actually an investment in the future, and we're increasing the tax base. And that is what measures the wealth of a nation, is the ability to increase after-tax return on capital. So we're pulling back think of it as pulling back the slingshot here. We have a lot of potential energy that will turn into kinetic energy during this year, next year, as these factories come online.
So do you think we've seen peak deficit during this administration?
I think a very, very good chance we have. That we are going to be laser focused, as I said, OMB Director Vought, myself, the President, that combined with the Vice President's Fraud Task Force, where I think we could save several $100 billion.
Yeah. I mean, because the funding needs, I think, are daunting to a lot of folks. The dependence on foreign bondholders, for instance, we saw the intervention in the Japanese yen, and that's erased a lot of the progress there. And so there are kind of all these worries at once about what's going to happen ultimately with these holders of treasuries.
Again, Again, people have bad information. I have asymmetric information. So, I think that the market should think, well, why would we have joined the Japanese in the intervention at this time? Do we know something the market doesn't know? That in terms of being willing to do, what I would call a treasury twist here, in terms of the bond market, what do I know that the market doesn't know? So, I think the market's probably gotten a little ahead of itself. A lot of people, not much to do in August.